download in the document library section on the platform. I am Swasti, Senior Manager at IIC, and your host for this session, a panel discussion on investable models in skills and livelihoods. Skills and livelihoods is a very critical sector for every economy, and more so in the aftermath of the current pandemic and the lockdown. A relevant insight from a discussion yesterday was that there is a huge opportunity for upskilling and reskilling our conventional workforces. With the disruption that tech enabled solutions will cause, we will need to engage with the workforce to make them more relevant to the market. You could broadly think about impact investing in the skills and livelihood sector across three main areas: the supply side, which is investable opportunities to prepare youth for the job market; the demand side, which is investable opportunities to stimulate demand for labor and create jobs; and matching, which is addressing the information asymmetry in the jobs marketplace and connecting job seekers with jobs. We have a great set of panelists for the discussion today, all veterans. Rahul Rangwala from Michael and Susan Dell Foundation will be moderating the panel discussion today. The panel will take audience questions in the last 15 minutes, so do type in your questions on the Q&A chat board on your screens. And before we begin the discussion, Anjani Bansal from the Bill and Melinda Gates Foundation will present the overall context of the skills and livelihoods ecosystems. With that, I would hand over to you, Anjani.
Swasti. Okay, can you see the slides?
Yeah, awesome.
Yes. Great. Yeah, thanks, Swasti, for setting the context for this discussion. I'll take only a few minutes to provide some background about the topic that we will discuss today. And we have a pretty incredible group of people on the panel, so we should dive into the discussion as soon as possible. So just taking a quick stock of where we are today. Countries globally are still struggling with implications of COVID on their economies, but we are seeing some signs of recovery in India. Indicators like power demand, GST collections, etc., are going up. There is some sense that a lot of the current uptick is due to pent-up demand over the last few months, but it remains to be seen whether we can continue that upward trend or not. Hopefully, it sticks. We have seen some resilience in sectors like agriculture throughout the initial months of COVID and as well as today. And the expectation is that that will continue. Without doubt, the impact on jobs has been large, particularly on blue-collar jobs. We know that up to 90% of blue-collar jobs are in SMEs, and SMEs have been among the worst affected segment due to economic slowdown and high cost of credit. What we have also seen is that while the jobs are starting to increase, but still there has been a significant decline in the labor force participation over the last few months. And that's a worrying trend, given there are fewer people in the country who are now looking for jobs. And that's perhaps a trend that we need to correct as soon as possible. What this crisis has also surfaced is the lack of resilience. We have all seen some of the very distressing scenes of migrants going back to their home states. And it has also surfaced issues around social security, healthcare, housing facilities that a lot of blue-collar workers struggle with in cities where they work. One of the more secular trends in India has been that employment in agriculture has been shrinking. As of today, perhaps somewhere around 42 to 45% of our workforce is in agriculture. But that has not necessarily translated into jobs which are of high productivity. And therefore, we have seen pretty much of a stagnation in jobs which are in manufacturing. And most of the growth has happened in jobs in services industry. And within services industry, as you can see from the graph on the bottom right, a very large number of jobs are created in a petty production. So not necessarily high productivity jobs with stable and reliable wages. What we have seen is that the impact of COVID has been across the board, whether it's urban or rural. Unemployment has spiked in both these segments. Some uptick in the recent months, and what we have also seen is that in different job categories, whether it's small traders and laborers or salaried employees or agriculture, there has been an effect across the board. What we also know is that, from data that when we look at the current job distribution in India, it varies whether it is when we cut the data based on gender or rural and urban. The sectors in which people are working are different. So what this tells us is that when we are looking at solutions to create jobs, also in addition to broad-based policy changes like the recent labor reforms, we also need to look at ideas and policies which are specific to sectors. What we are seeing is that manufacturing and construction are perhaps two sectors which would play a leading role in creating a large number of jobs. And it will be important to support ideas and entrepreneurs who are creating jobs in some of these specific sectors. Others as well, including trade, logistics, which are likely to play a really important role. Also, what is important to recognize, and I will talk about this a bit more later, is to create equal opportunities for women. When we look at, when we cut the data by gender, whether it is in rural or urban, we see that the sectors in which women are employed are different. And therefore, it would require more intentional interventions to perk the women labor force in our country. Just to to shift from where the jobs are to where the jobs have been lost. Now, when we look at the unemployment data, again, we see quite a variation between men and women and between rural and urban in terms of how the job loss has happened. One consistent theme, though, is that the job loss has been highest amongst the most educated population. And it shows that just being educated is not good enough. What we also need are the right skills which match the current market demand. And that's where the chart on the top right is important because it shows that it's a very small proportion of population in our country has actually received some kind of vocational or technical training. So that shows that there is a huge market or huge potential for skilling that exists in the country, and in some ways is waiting to be tapped by right business models. And that leads us to where the opportunities are for impact investing. What we have seen is that from earlier slides that we know that economy is likely to recover soon. There are projections that there is likely to be a human resource requirement of over 100 million people in the next over the course of 5 years, and we know that there is a large section of population which is not appropriately skilled to take advantage of this demand in labor market, and therefore there are several investable opportunities, whether it is stimulating demand by directly investing in sectors that can create jobs, or in skilling for job seekers in trades which are in line with where the demand is taking place. Also, more innovative ideas around job platforms that connect employers to job seekers, and at the same time having an intentional focus on women, given how small their contribution is today to a workforce of our country. And what we are also seeing is that there is a divergence from the historical trend of jobs being present in big cities to more demand of jobs and more supply of labor also being available in tier 3 and 4 cities, partly due to COVID, because a lot of people have migrated to smaller towns, and also because what we are seeing is that there is more economic resilience in the smaller towns, and therefore there is a greater demand of products and services in smaller towns compared to large cities, and therefore they're emerging as centers for job creation going forward. And I will end with this last slide, which is, I will stick my neck out and say, if there was one silver bullet in terms of what impact investors can do, it is to invest in opportunities that create jobs for women. Now, in Indian context, pretty much there is no lack of numbers which are large and hit you in the face. But for me, this is the one metric which shocks me every time, that there are over 340 million women which are not in paid formal work in India. And to make it worse, we are seeing a declining trend on female labor force participation. On top of that, even when women are in workforce, their participation in sectors that provide higher wages, like technology, communications, financial services, is extremely low. So even when they're working in sectors which are not very productive. And therefore, it requires us to think and be intentional about solutions that can bring more women into the job market, into productive job market. And that requires thinking about jobs that can provide facilities like for daycare and nursing, flexible work timings, also a safe work environment, and facilities like safe transport services. And also upskilling and reskilling programs for women who are returning to work after a break. And if we can construct our job market coming out of COVID in ways such that it becomes attractive for women and enables them to return to work, I think we would solve a big problem. So let me stop there. And with this, I will hand it over to Rahil to kick off the panel discussion. Thank you.
Thanks, Anjani. That was a really great context setting of what the current market is like for this panel, and we have a really exciting panel for all of you guys today. And the panel consists of funders as well as entrepreneurs who are dealing with sort of these challenges on a day-to-day basis that Anjani was talking about right now. What I'll do is we'll do a quick round of introductions. We'll go through it and give each panelist a chance to quickly introduce themselves, and then we'll get to the moderated discussion. Arun Kumar, I'll start with you. If you can give a quick introduction about yourself, the organization that you represent, we'll start from there. So you're on mute.
Thanks, Rahil. Good evening. Good evening to the other panel members. This is Arun Kumar Pillai, and I am the Chief Strategy Officer at National Skill Development Corporation. NSDC, as many of you would be aware, is the nodal agency for skill development in the country. I look at the corporate strategy initiatives, the international collaboration, the skill financing piece, and also the IT piece within NSDC. I look forward to this discussion.
Mahesh, would you like to go next?
Yeah, thanks, Rahil. My name is Mahesh. I am from Acumen. I'm the country director for Acumen. We have been investing in workforce development specifically in India as well as our office in US. So there are two areas where we have invested in workforce development. We're really happy to be part of this and at such a pivotal moment for this sector. Thanks.
Ratna, if you could go next, please.
Sure, Rahul. Thanks a lot. Good evening, everybody. I am Ratna Mehta, and I lead the Wadhwani Catalyst Fund or the Wadhwani Foundation. So the Wadhwani Foundation overall is focused on improving quality of lives in emerging markets like India, Southeast Asia, Latam, and Africa, primarily by creating quality jobs for people, because we believe that by backing right entrepreneurs, you can create large-scale jobs, which in turn can really help improve the economy. And through the Catalyst Fund, we want to fund early stage entrepreneurs. Sector agnostic, could be logistics, could be retail, could be healthcare, which in turn have innovative solutions and are creating system level change. Thank you so much and look forward to this panel. I think livelihoods is a global topic right now, and it's heartening to see the kind of traction that it is seeing in the Indian ecosystem. I'll pause here, Rahil, over to you.
Thank you, Ratna. Gayatri, if you could introduce yourself next, please.
Thanks, Rahil. I'm Gayatri. I lead an organization called LaborNet. LaborNet is an organization which works on enabling livelihood. Largely, we've been in the blue collar space and in the hard skill space. Thanks.
Thanks. And lastly, Radha Ramaswamy Basu, if you could please introduce yourself.
Hi, good day, good evening. I'm Radha Basu, and I'm a leader in organization, founder and CEO of iMerit Technologies, and we're practitioners. We basically deliver global AI technology services to clients all over the world in applying AI into it could be agriculture, autonomous vehicles, med AI. We basically have a workforce of about 3,000 people. And some of the things that Anjali said are absolutely right on. We have 50% of our workforce, 54% are young women. And average age of the workforce is about 23.8. Most of them are between 18 and 25, working in non-metros. And a very key part, critical part, is the advanced skilling to create an advanced workforce that competes globally in AI tech services. And that is the key to what has made us successful. We are very fortunate to have impact investors like Rahil and Dell Foundation, Omidyar Network, COSLA, and most recently CDC UK. So the whole idea is to make this as global and as competitive and as high growth as possible to participate in the AI and tech economy worldwide.
Thank you, Radha, and I know you're dialing in from California, and it's really early in the morning, so I really appreciate you getting an early start to your day for us.
My pleasure to be on a panel like this. Yes.
Thanks, Radha. We'll go back to Arun. NSDC has, as you said, is sort of pivotal in making this the skilling market in India over the last 10 years. And Anjali set the context of the market today, which has a lot of challenges. And I want to pivot the conversation a little bit towards, given all the work that NSDC has done in building this ecosystem, getting this ecosystem to the stage it is, but now that it's facing these challenges, where do you see the investable opportunities in skilling in the ecosystem today? And how does NSDC plan to engage with the ecosystem going forward a little bit as well?
Thanks, Rahul. So you are right. Over the last decade, NSDC has provided the catalytic capital required close to around 1,000 to 1,200 crores to create this entire market ecosystem for skill development, primarily in 4 areas. One is the need segment, which Anjali spoke of. We spoke of close to around 130 million people. So we are talking about placement linked skilling in this sector. That was the first area. The second is the whole recognition of prior learning space, where we are talking of an entire transitioning the unorganized sector to an organized format. Third is, of course, where we're talking of skilling in education sector, in the sense in schools and colleges, the employability related skilling, providing them the skilling in emerging technologies, which Radha spoke, the last mile domain skilling and the work readiness skilling. And last, of course, is the upskilling with the existing workforce. So of the existing workforce. These are primarily these 4 areas of focus for us. And over the last decade, as I mentioned, close to 1,000 CR investments from our side. And what do we have to show for it in terms of outcomes? First, of course, is the building blocks are in place. In the sense that we have the various institutions. We have close to 37 sector skill councils. We have close to 600 training partners delivering this training. We also have the entire NSQF framework and the various standards and things like that. We also have what you call a kind of nationwide IT system, so that we can monitor, we can do kind of analysis, data analytics can be done. The whole range of building blocks are in place. In terms of outcomes, close to we have a capacity to train around 5 million people every year. We present the presence of our partners across the country, so there's a wide reach. And even now, like 10 years later, skills was never a buzzword 10 years back, but at least today we speak skills, and the efforts NSDC and its training partners has contributed to that. So therefore and the third thing, one more thing which I would like to point out is our initial investments has drawn close to around 3,000 to 4,000 crores from private sector partners. So they have brought in their own funds. When we do an analysis of the balance sheets of all our training partners, the CSR funds they have been able to draw in, etc. So this initial investment has brought in close to 4,000 to 5,000 crores into the ecosystem. So according to me, it's a market. The market has evolved. It's a market in progress. We are looking. We will continue to play the catalytic role. So what we are seeing now, we are seeing models which are more blended, in the sense we are seeing models where public capital, philanthropic capital, impact investors, even the CSR funds, the entire range of capital coming in some kind of blended structured models we are seeing those emerging. We are also seeing certain VC funding happening in certain sectors, certain areas within the sector. As far as investable areas are concerned, within Rail, to answer your question, the first is Anjali spoke about the various sectors where there is a need for incremental manpower. So we have this whole set of training partners who deliver training across this ecosystem. Today they are adding a digital layer to what they are doing. This is like investment in companies among this. In our portfolio, we feel some of these companies are really good bets to invest in because they have exposure to all these sectors, and with a digital layer being added, clearly they look like companies which could go forward, be driving the impact in the space. In terms of sectors, I would call out 2 sectors. One is healthcare, the other is IT. And why I mentioned these 2 sectors, because one is of course COVID. These sectors are emerged less affected by COVID. But what is more important is these are global sectors as far as India is concerned. We can train. There is a shortage of manpower, healthcare, and IT across the world. So anybody investing in these companies which train in these sectors would be clearly be looking at are looking at large, big, in the sense a huge amount of skilled manpower to be created across sectors. Other areas, of course, is assessments. We are seeing a lot of assessment. We could see a lot of assessment companies. These are areas of investment. Similarly, skill tech in colleges, schools, etc. We also see foreign language training. We are seeing like with this overseas placement picking up, Japanese, German, even English, the IELTS, etc. These would all start picking up, and of course the whole range of upskilling initiatives, etc. On the matchmaking side, of course, 2 matchmaking. One is between the trainee and the training company, which is the counseling space. So we could look at investable models and counseling in this space. We also look at, of course, between the skilled trainee and the employer. That is the other area of investments, other area of matchmaking, a placement area. We also see a lot of potential investment areas in these areas, in these sectors. Finally, what are we doing in the last 1 year to look at this opportunity? As I mentioned to you, our focus is on blended models. We are working along with MSDF and British Asian Trust to launch some skill impact bonds. And we are seeing HSBC, philanthropy, SIF, etc., the outcome funders on this. Similarly, we are also working with Social Finance International to launch a skill loan fund, a skill loan product, again with some kind of guarantee support. And again, MSDF is a partner we are working with. We are also in talks with looking at creating some financing products for vocationalization of schools, vocationalization in schools, etc. So these are the blended finance areas of impact investing we are seeing. We are also working with certain VC funds within the scaling space. There are a number of innovative tech models emerging. We're working with. As I said, what our role is a catalytic funder. We welcome all kinds of impact investors. What you could get is from us support in terms of because of the way we monitor and enable the ecosystem. So in terms of monitoring the your own investments, in terms of pricing your risk, etc., we're willing to co-invest also with you. And lastly, of course, we would be like a kind of bridge, between the government and the impact investors, considering the fact that we are a public-private partnership kind of institution.
Thanks, Arun. You actually covered a lot, and there are a couple of things that I do want to come back to you on, but I want to pull Mahesh into this specifically on the financing products, because I do know some of the work that Acumen has done in structuring some innovative financing around impact as well. And Mahesh, I will also ask you another question, which is another conversation we've had is from the, like, who pays for skilling, right? Which is the financing component of this, right? And that's one of the challenges that you have. And I think it connects really interestingly well with the point that Arun was talking about, skill financing as well. And time permitting, if we come back or if there are maybe questions from the audience, we'll focus a little bit more specifically on skills financing. But Mahesh, if you can talk a little bit about your experience with structuring different types of financing products for the sector.
Yeah, thanks, Rahil. Yes, I think our experience has been a mixed one. It's very tough to do. We also thought of a large-scale bond, and then we actually pivoted to create a very small demonstration product. But I think it's an interesting one which we have tried. I would still call the jury's out on it. But what we try to do is we created a loan product for a set of skill development companies to an NBFC. And the way that we created the model is if it can be shown that there is an impact after a year or two with some very specific metrics, the interest rate on that, but it's a loan. It's not a grant model. Typically, impact bonds are grant which gets totally repaid. Here we have built a clear incentive that the skill development companies actually achieve the impact targets. If they achieve the impact targets, the interest rate actually gets reduced and waived off. And that is the outcome funder, that means just comes in for the interest component of the loan and not the full amount. And this is something we have done already, and it's with the product with 5 skill development organizations. That is just before COVID, we kind of finished that. That's our experience has been. I would think that it has some challenges because getting the outcome funder to specifically look at outcomes across a sector and also specifically then targeting in terms of how it flows back into the company, some of the regulatory challenges. But other than that, I think fundamentally we are quite positive as a demonstration that once we have a good product, we can talk to people like Arun and NSDC and build it on it rather than it being a grant to grant support. That's one part which is there. And the other one you alluded to, I think, is a very, very topical thing, is about how do we have elements of supporting the pay, because how do we kind of create that system? I think there are very interesting models coming, though they all have their own challenges, but I think there are some interesting options, like even peer-to-peer lending, for example. And there are neo-lending platforms which are really, we are looking at, which could actually fund very, very, if I could call it blue collar. It's easy to talk about skill finance the moment you go to IT and honestly, AI training and all, it's not a big deal, to be honest. The real thing is the hard blue collar and the people who are going between jobs and where there are temporary kind of jobs. I think that's where we have to think very hard about the whole thing. And how, is there a pay model at all? Will they even pay for it? And that's kind of where aspects like peer-to-peer as well as very small lending platforms are available. And we are looking at some of them. We're not yet invested, but we are close to looking at a couple of them in this context, actually. Those have been our experience, and we are very positive on that.
No, I think the structuring challenge is definitely one that I think even with the development impact one that we're doing with NSDC, it takes time. I think to get a lot of the outcome funders and all the risk investors aligned, it's definitely a journey and a process. And I think we could, in fact, there is a separate panel specifically on development impact bonds. So I'm just going to maybe plug that panel a little bit. I think it's tomorrow. If you're interested in that, you should definitely attend it. On your point, Mahesh, on skill financing, in fact, we have done a loan to a skill financing company specifically to do lending to blue collar, gray collar workers. It is not as trivial because the risk component is quite high. Hopefully the thing that we're exploring with social finance on some sort of guarantee product to absorb some of the risk to incentivize additional partners is one way that impact investors can think about engaging in this ecosystem, right? It doesn't have to be putting money down, but even guarantees can unlock significant amounts of capital.
FLDGs. Exactly. Things like FLDG and getting the first layer is one way to kind of unlock that capital. And I think that's one way to set it up. I totally agree with that.
Yeah. And I know you've just recently done this interest subvention model from an impact lending perspective. Do you have any kind of early data, early results, or anything that gives you that sort of positive perspective on this approach?
Yeah, I think in terms of getting the companies to come into it and take a loan and be committed to achieving impact, all that was actually quite easy, and people were very clear. There were 5 different companies. They're not our investing companies. Some of them were new. So that was very, very positive development. And in terms of engagement of outcome funders, we have had quite a bit of interest, but I must say it's not yet converted to final, that dotted line, which is still pending. And that has been partly because of the disturbance due to COVID and all the other distractions around it rather than anything else. So I would still call it fingers crossed till it really happens. The deal is not done till it is done. But we have created the product in a manner that in case there is no outcome funder, then the risk is actually not on the companies which have achieved the impact. So that means the risk goes back partly to the NBFC and partly to someone like Acumen who's given an underlying guarantee. So that's kind of the way we have created it. So that it's not exposing the companies which are achieving the impact. So it's a purely that way a reward structure created for them. So if they achieve the impact, whether they get an outcome funder or not, they will get the interest subvention.
That's great because it's sort of, I think it's the first, one of the best ways for impact investors to also say, look, impact matters to us. And look, we're willing to pay for it. Otherwise, everyone focuses too much just on the financial return. So I think that's a really good model. That's awesome. Thanks, Mahesh. Ratna, I would, you talked a little bit about in your intro about the aspect of jobs and job creation and really good quality jobs. And I think, I think even in Anjani's presentation, he was talking about this as one of the challenges that faces the market today. What are some of the things that Wadhwani Foundation is sort of doing to accelerate and improve the demand side of the equation? And I know you work a lot on the entrepreneurship side, and it would be great to hear a little bit about that.
Sure, Rahul. See, as we all know, I think, entrepreneurship is kind of an answer to a lot of problems which a country like India would face at this stage, right? Whether it is job creation and more so because of the pandemic, or poverty alleviation, or even education for that matter, right? Because as they say, small businesses are the roaring engine for creating jobs. And one of the things that the foundation does is they have training programs to support create new entrepreneurs, as well as they have transformation programs to help small businesses excel. As an extension of that vision, what the fund does is basically comes in early to support entrepreneurs, because we think that good entrepreneurs can create an ecosystem around them and can create quality jobs. Right. So, for example, if we see, there was a report in 2019 by IVCA, which is India Private Equity and Venture Capital. 26 lakh jobs were created by companies which were backed by these investors. Right. And this number has been growing year on year. So there is like a 27% growth in this number over the previous year, right? So, traditionally we've seen a lot of skilling models, right? And these skilling models have come a long way because they've been able to train the youth and make them employable. As they say, less than a fourth of the youth is actually employable post education completion or even for dropouts. But we talked about AI and we talked about the entire digital layer, and with that the skilling models also need to evolve and change and adapt to these things, where they skill and reskill the people to kind of adapt them to the new normal. But one of the other important ways of kind of promoting entrepreneurs is the new innovative models of entrepreneurship, right? So Arun talked about healthcare. He talked about one more sector. One of the sectors that we are seeing that there is a lot of direct creation of jobs is logistics. So say for example, last mile delivery. So we've seen a lot of models where in the rural areas, semi-urban and rural areas, the infrastructure is totally broken, right? You don't have access in those areas. Even large FMCG companies are not able to reach there. But a lot of startups, a lot of small businesses have come up and are innovating new ways to kind of reach there. So there is a last mile delivery where these guys tie up with somebody in the village who is like a village spock, a village entrepreneur, who actually creates a business around this and is able to create the last mile delivery. There are companies like OneBridge, Connect India, etc., which are doing this very beautifully. So while technology is a very important part of what they are enabling, these are operationally heavy models and they will require people within every location. So currently OneBridge reaches over 5,500 villages across 6 states. So there is a lot of opportunity of direct employment creation through these new and innovative models. Similarly, in healthcare, we've seen, suddenly the pandemic has brought to fore a lot of telemedicine companies, right? And while telemedicine is fairly popular within the metros and the tier ones, in the rural areas, the problem is exaggerated, right? Because you don't even have basic primary care, forget tertiary care and specialist care. And some of these models are creating a blended thing, online plus some offline presence, because in the rural area only online won't work. So either they're going through pharmacy networks or they are going through other agents on the ground, and they're creating these models which over time can create a lot of jobs. So while skilling models have been at the forefront and we are always talking about creating entrepreneurs through these skilling models, there are these innovative businesses which can promote a lot of job creation, Rahul.
Ratna, I wanted to ask in terms of funding instruments, I mean, to the point that even both Arun and Mahesh were talking about, as you are working in this space with entrepreneurs and it's early stage, some perhaps maybe Series A type of organizations, where do you see the need for different forms of capital? Does Vadhvani think about itself with different forms of capital? And to the other investors listening to this panel, how should they think about it?
Absolutely. I think as we are evolving, the kind of instruments, the kind of structuring that is going into funding the job creation piece is increasing, right? So for example, earlier we used to have grant-based, outcome-based funding, based on saying that if a certain number of targets are met, we will be funding them by X dollars per job created. Those models are evolving to say that we want to do a long-term partnership, and therefore equity and convertibles are becoming other instruments that we are seeing are getting increasingly used. So if we look at the entrepreneurial ecosystem, there are various ways in which they are getting supported. So you have impact investors who are at the forefront of this. A lot of them have done grant funding in the past, but they are increasingly, and Mahesh will agree with me because they've been doing a lot of these deals, right? Doing equity to kind of fund the growth of companies who are creating jobs. Then we have government agencies like the Atal Incubation Mission, Invest India. They are providing capital for these companies. We are seeing an entire ecosystem of incubators and accelerators which are being built around these themes, which are kind of enabling funding for these organizations. So at Wadhwani, we are very open. We are instrument agnostic. Wherever we think that it is a platform which requires grant or outcome-based funding, we're open to do that. But we are actively exploring the equity partnerships, because what we're seeing is that our capital needs to leverage other capital. We don't want to kind of put in money and stop at that. We want to bring in other funders, and we're increasingly seeing participation by early stage VCs and traditional private equity also in this space. So I think that's the best way to kind of gravitate towards it.
Thanks, Ratna. That was very useful. I'm going to talk now to the two founders on this panel who actually have first-hand experience with everything that the investors have been talking about, both the good, bad, and the ugly. Gayatri, I'll start with you. I think I was remiss, Gayatri, in also mentioning that you've got numerous awards, and I won't go through all of them, but I know, for example, at least the Forbes India Social Impact Entrepreneur Award, and Business Leader for Women as well. And but LabourNet is also one of the largest kind of stalwarts in the industry from a skill training perspective, especially when it comes to the informal sector. And Anjani did lay a bit of a challenging scenario from a COVID perspective, right? And that's affected skilling companies perhaps the hardest, especially when this sort of center-based training models, given your centers were all shut. How have you and LabourNet dealt with these challenges? And going forward, I think there are opportunities that I do know that LabourNet is focused on, and I think some of the other panelists had touched upon it, from entrepreneurship to some of the other green shoots like telemedicine and even jobs for women. Where do you see the opportunity also for LabourNet?
So it's an interesting one to come after all the three investors. And as it happened, I have all three investors on this panel. So you, Rahil, from Dell, Acumen, and NSDC. So we've dealt with all the three capitals: equity, debt, as well as the instrument that Mahesh spoke about. But let me just discuss the last 6 months and where I think this ecosystem will go into. I don't know. I'm probably you have the panel is on the right day. I don't know if all of you have read Mint today. The last 2 days has been all about skilling in the Mint. There has been a center page editorial yesterday. Today there is Subrata Bakchi who talks of the crisis in the system. And fundamentally, it's coming from the centers being shut down. So equivalent to the tourism or the restaurant business, I think the same issue exists here. How are you education? All of these are how are you going to get people into a classroom? I think that's the fundamental question, which is actually staring us in the face, right? Every day you see a postponement by 5 days, 10 days, 15 days post the okay of opening. So you're literally waiting to get out and start a class, but it's just almost impossible. But at the same time, if you look at all the statistics, the need for skilling seems to be, there's no question. Everybody's saying skilling is absolutely a must. Learning is important. The creation of jobs are important. I think there are, and I'm just going to I think I've got great reference material in the last 2 days, fortunately or unfortunately, and I'm going to take the positives and the negatives. There is an article today which again says that skilling does not cause employment. Again, it is in the Mint. It says that skilling has failed in causing employment. Forget not causing employment, has failed in causing employment. And at the other end, it is that what does the skilling companies do, right? Classes are not there. So I think there is, as far as as far as our space is concerned, one has to rethink it. And in my opinion, it is going to be the direct link to jobs and upskilling and reskilling. You need to quickly get people to work and then move them up the productivity ladder. It's not going to be vocational training in classrooms and then moving them into the job scenario. I'm not saying that is not necessary, but what I do believe is that opportunity or that model has to be supported by grant. That model cannot be supported by equity investments, because in that model, the problem that is there is you're correcting a system of education which is terrible. Everybody you get into a center is a person who has really, really struggled with between 8 to 12 years of education. And that's the problem. So when we're trying to fix that problem, you have, naturally there are issues, right? You cannot correct it quickly in 3 months. But what you can do is that you need 3 months for counseling. I want to pick up Arun's, point there, is that we often think of counseling as something to do online and tell people where you're going. But counseling is also about exposure to different skill sets. Counseling is also the exposure to discipline, I think, which is what skill centers have been tremendously successful. They have transformed the way in which a youth thinks about the future. I think they're going to jump jobs, they're going to move around, but at the same time it has been very, very instrumental in changing the way social capital is applied to skillings. Otherwise, education has taken us a long time. It's a 20-year, it's 2 decades where you find everybody in school in primary schools. So I think in skilling, unfortunately, I'm not sure everybody has the patience for that. Neither government, nor CSR, nor philanthropy or grant. And I'd like to really make a case saying that, don't abandon the baby. That's the key that is important for us. As far as we're concerned, one of the things we decided late March was we can't wait for skilling centers to open, right? We need to get people to jobs. Our tagline is enabling livelihoods. That means it has to be quick jobs. And like Ratna said, one of the things we did was logistics seemed to be the, where the jobs were. I'm talking of early April. So we said, let's just go source candidates and get people to deliver. Whether it is pharmacy, we started with pharmacy, Apollo Med, delivery of medicines, moved on to groceries, but said that there's a need for quick job matching, quick onboarding, and then there's a huge need for skilling. Because these deliveries, oftentimes, the person is measured on the number of deliveries that they do. Which means you need to look at, are they communicating right? Are they reading right? Are they calculating right? Are they traveling right? All of those has to happen simultaneously. Similarly, we said, where are the jobs? Sales promoters. There are all kinds of things which are in the, where essential goods have to go, be sold or be delivered has scope. We also started sanitization and hygiene as an entrepreneur because we said, COVID is going nowhere and possibly this is one time where you'll change behavior patterns. That means hygiene is going to become important irrespective of whether COVID remains or COVID goes. And today, we've ensured from a supply side, people earn. People earn anywhere, even in a place like Assam, or Naurangpura in Odisha, 150 to 200 rupees a day. In a city like Bangalore or Mumbai, they're making close to 500 to 800 rupees a day. So which means if you have a platform which is able to provide people who can come and do your disinfection, your hygiene, because COVID, the moment you get out of COVID, right, you are 14-day quarantine and out, your house has to be quarantined. Your offices have to be regularly sanitized. So these are opportunities which are available. we're also seeing a huge upswing in the kind of remigration which is going to happen. We just finished a study where we found that 75% of the people who migrated back, those who we gave food kits to, want to come back to the city. There are no jobs in the rural area. So there is going to be a tremendous upswing on the job matching which is going to happen, and how you're going to bring them and do the connect to work. So the last mile of right from job matching to connect is going to see an upswing. In all of this, I can't see it happening without a consistent handholding post the either the entrepreneurial opportunity or the job matching. Merely those two as will look good on paper, but actually if you want to ensure the person remains in work, is able to do quality and is productive, requires skilling post their getting to their let's say starting job, right? Whether because they've remigrated, they have to reinvent their lives, or because they're back home, they have to reinvent their lives, whether it's city or rural. I think that's the pattern which you're going to see. So in my mind, skilling companies are probably the best suited because they have the reach for us to adapt, pivot, and quickly launch because the scale is available. So with scale availability, you should be able to quickly move to demand, how demand is coming up, and move from supply to demand and do the matching and ensure last mile because we're used to doing last mile. So it's a bit like, we are this, we're the parent of a slow child. So I think that's where we are.
Gayatri, you touched upon this a little bit, but I think even Arun said this in his, when he was speaking, was the digital layer that's becoming sort of a critical component. How is that playing a role in your plans and as you look at matching and supply and demand and some of these entrepreneurial opportunities?
So let me start with skilling. I think most of us have moved to virtual platforms very successfully, right? And we've also got about 60 to 70% attendance there, which is about what happens in a normal classroom. So from that perspective, I would say virtual classrooms have become a reality, which means the whole physical classroom for theory can actually just disappear. You don't require it. What you require is the matching of spaces, and I'm thinking more like OYO, right? You need to have practical training done. So there's a huge opportunity for us to aggregate spaces for practical training instead of the traditional models. So the moment you're able to do that, and most hard skills that you need require training, right? For example, even if it's a delivery person, you need to know to ride a bike. Forget everything else. You can't do it without it. And you can't teach that only through simulation. I'm not even talking of welders and beauticians. I don't know how many of you want to have a haircut by someone who's done it virtually alone. So you may not want to give your head to the person, So I see a huge opportunity of us being able to aggregate spaces and therefore doing practical there. And that's an opportunity. As I said, there's also a huge opportunity in the entrepreneurship, what used to be called self-employed. If platforms are available for us to put them onto it and ensure actual gig leading to full-time employment almost, is a huge opportunity which is available. And for this, technology is going to be critical because you're not going to handle the scale that is required without technology, and the technology will probably have to have, may not be very complex, Bots can possibly do, chatbots, for example, have been very useful for us in dealing and simplifying questions even from customers as well as from candidates. I think we need to look at simplified technology, vernacular, very important for us to take it off.
Thanks, Gayatri. I could ask a lot more questions, but I know we're short on time. So, Anjani, I want to come to you, and I want to connect a few things that Gayatri was talking about. And I know Gates has had traditionally a very large sort of rural SAG livelihoods focus, and we've not really touched on rural as much on the panel as yet. It'd be great to get a perspective from a livelihoods perspective of rural from you. And the specific thing I just want to connect to what Gayatri was talking about is the gig opportunities, which is very common, I would say, in urban, and we're very familiar with it. But where do you see that as an opportunity also in rural?
Yeah, thanks, Rahul. So yeah, I think there is definitely a lot of opportunities in rural as well for livelihoods, and I would start with technology. Even though agriculture is as an employment is a sector is shrinking, but still remains one of the largest sectors in the country. What we see, where I see a lot of potential is around increasing use of technology to improve productivity of our farms and agriculture laborers. So as we know, there is a lot of growth in the Indian ag tech sector. However, if you look at the reach that the ag tech sector has in rural India, working with small farmers, it's still very early days. And that's where I see there is a huge potential in skilling people in rural India to act as extension of ag tech companies that can then enable penetration of those models. There's a huge gap there. If you look at the, say, the curriculum of agricultural sciences that is taught in the country, it hasn't changed in last 50 years. And yet, the technologies that we expect that will drive agriculture in India over the next 10, 20 years have changed dramatically. So there is a significant bridge that needs to be built between what skills are available and where we want the agriculture sector to go. These technologies range from IoT devices on farms, drones, traceability to track supply chains, etc. So there's a huge potential there. Second, I would say is around primary processing. Less than 2, maybe 5% of fruits and vegetables in India are processed. And we are seeing a lot of traction or momentum in India where companies are coming up with models that can enable near farm or on farm processing. And that then creates opportunity for a rural population to provide those services to farmers. And that can translate into a gig economy type employment where you are performing a particular service, say drying produce for one farmer using your modular equipment, shifting it to another farmer and providing that service to that farmer. And that model can also be extended to modular cold storage services as well. So there is a lot of potential there. And then Ratna mentioned the growth in rural e-commerce, which is also gaining increasing momentum in the country. That's another source. And then finally, I would end by saying a point that Gayatri mentioned around entrepreneurship. We are seeing increasing growth in agriculture entrepreneurs who are in some ways are a bit like banking correspondents, but of agriculture. Where they're able to bring in a packaged set of technologies, agriculture, financial advisory, and offer those services to farmers. And what we have found typically, which has been less financially sustainable, where the services were offered in a retail way. So if someone is offering only advisory to farmers, it has been difficult to create a financial model around it. But if you offer a package of services, then it becomes something more financially viable to build as a business. So those are some of the opportunities that we are seeing in the rural markets.
Thanks, Anjali. I may come back to you on like the bundling of these services and how easy or difficult it is to do that. But I want to move to Radha. And Radha, I think you will perhaps be the only panelist that I will ever have the honor of moderating who has been profiled by Sports Illustrated. So it's great to have you on this panel. And we started this conversation, I think, with a skilling lens, where Arun was talking about the role of market making that NSTC has played, you have sort of this unique global demand lens, which we know is an important part of this equation, right? It's not always just local demand, but global demand is very important. And iMerit is clearly also an enterprise which is in its growth phase today. It'd be great to kind of get your perspective on this global demand and how you have connected the opportunity to the Indian ecosystem, and now you're also a global company actually, and the kind of capital that's needed now for this sector and what needs to be demonstrated. I think success for every sector has to be in the form of when organizations go to IPO. And whether that is the direction iMerit is taking, I hope that's the direction iMerit is taking. But what needs to be done to facilitate that? I think that's the other side of this equation that we should talk about as well.
So Rahel, you know how passionate I am about really not thinking of impact investing, but making that a mainstream and having the inclusive workforce be a clear differentiator to the business. So to me, business drives, global business or clients drive how much the results and the impact that you can have and how large a set of opportunities and jobs you can make available to people. Let me just say, first of all, since you mentioned Sports Illustrated, iMerit featured as, I never thought I'd be on Sports Illustrated, but iMerit was featured as a tech company, an AI tech company that changed the way AI was used to make people like the Chicago Cubs and Dodgers and people like that in Major League Baseball really successful. We have offered it actually, to the BCCI as well. That was just, that was more in jest. But to me, the global demand for digital services is a clear driver for creating jobs. If you go back to the mid to the late 1980s and early 1990s, nobody believed that IT would be the driver of middle-class jobs in India. And it has been a huge differentiator. If you look at digital jobs and data jobs being in China, there are like 600 to 800,000. We don't know the exact number, but somewhere in that range of jobs being created. So the important thing for me is looking at the global demand and whether it's AI's adoption in transformation, in digital transformation. AI is a tool, it's a technology or a set of technologies. Technologies could be geospatial, drone, natural language processing, sentiment, product categorization. So it's a variety of different applications. It could be used to figure out whether there are poachers in forests, all the way to quants for financial. So if you look at that set of digital transformation, then if you look at that on one side, so business driven, client results driven, not back office, but very much client business driven AI transformation, then on the other side, you say, what kind of a workforce do I have to create to make these results? And has to be what we can call an advanced workforce. Then you can ask the question, how do you then hire women from rural or tribal or under-resourced communities or young men from there? We are, by the way, I should be clear and say, we are 50-50. So while we focus a lot on the jobs we've created for women, it's a lot to do with how do you skill them. And the third piece is the technology. So can we take somebody who's got a 12th standard education and can we make that lady the best as an advanced workforce in being able to do autonomous vehicles or geospatial data annotation and provide the client insight? And the answer is absolutely yes. Does that create 500,000 jobs? Does that create 1 million jobs? I think it all depends on how we move forward. But the ecosystem from an investment point of view, to me, says that if you can have that business drive this inclusive workforce, and technology being, we use technology in everything, especially over the last 6 months, which has been, we went from 2,700 people in 8 centers worldwide. We have 6 centers in India, 7 centers in India, 1 in Bhutan, and 1 in New Orleans, 9 centers worldwide. And we went pretty much overnight to only 400 people working in centers, and that was just the Bhutan center that was open. So we had to completely pivot the company to be able to do work from home for some very, very critical high bandwidth computer vision, annotation and annotation solutions type of projects. Very daunting. My point is that what the last 6 months have shown, which to me brings the excitement, and Gayatri was talking a little bit about the opportunity. It has shown that these young people can work from home. It has taken a lot of effort. We can put in the technologies. We can have a distributed workforce. We can have remote and online learning. We look at our people. We work, of course, with our nonprofit partner, Anudeep, parent partner, and Rahul, you guys know that. And how do you convert those skilling centers into being able to do it online or to be able to do it through mobile? Variety of different things that we've tried. Even things like work from home protocols, security. I'll give you one example. So we have a lot of stuff implemented on this little techie example on remote VPN. We were having bandwidth issues. Some of the bandwidth we need is very, very high because we're talking about big computer vision images. We went through and trained young people who had never seen what a sysadmin is to be able to reconfigure their systems from one VPN to another based on bandwidth, and to be able to measure the bandwidth at their centers. Look at what is the high bandwidth times. These are all sort of things about learning in work from home. My net on that is that it is possible. So now let's look at the investments needed. You asked the other question. Yes, of course, I think taking this kind of an investment and an inclusive workforce and in the global markets and taking it to public offerings and being able to show that an inclusive workforce impact invested company can be as competitive, whether it's in the global markets, with global clients, with global technology, is to me a dream. And we would really, I mean, like to see that happen. So what does that take? It means now that we actually have, as you know, both US, India, now Europe, it requires the investors to be able to look at this, that mixture between, or the nexus between growth capital with having an inclusive workforce and the investment in technology to do that. And very importantly, board members, investors who are really savvy about global markets and bring that in order to create this global presence. Because we often focus on the inclusive workforce side, which is absolutely, that's our passion. That's in our fabric and fiber. Of course, it's almost like we don't have to close our eyes and the inclusive workforce happens. But inclusive workforce is not an end in itself. Why do we say an inclusive workforce is really critical? Because it is giving us 6% attrition. Not 30% like the IT industry is, but our retention is at 93, 94, 95%. And our clients love that because they move up the value chain. So it becomes a competitive differentiator. It is these kinds of things and investors bringing in that real savviness about what's happening globally, what's happening in the markets, and looking at the investment from the viewpoint of how do we really enable this for this industry or this company to go public, to become a real force, globally, I think is a very important part of it. And as I was listening to the stuff, the skilling is, the pieces that, whether it's Arun or Anjani or Mahesh, they're talking about, and Ratna, about the skilling part. Anudeep for us and the work that Anudeep does is hugely critical. But they start at this level and we have to move people up to this level. How do we make that skilling work? We're building a leadership academy to get our team leads into project managers, into client consultants. So building that leadership academy, those are things that becomes a very important part of the investment. I'll stop and see if you have other questions.
No, thanks, Radha. I'll just give some context for the group. Is that Anudeep is your sort of sister parent entity, which is the nonprofit skilling company, and a lot of the inclusive workforce that Radha works with actually comes from Anudeep and trained coming out of Anudeep. But I think it's a really interesting point, which is the training doesn't stop there. I think the point you're saying is that for career progression, for them to succeed, there's a lot of on-the-job, almost embedded in the job training that happens, which is this holistic view that's required for long-term success, not for the company alone, but even for the individual.
And for the industry, I think. We call it mentoring in the line of work. So this learning on a continuous basis. It is not a course. It is not 3 sets of courses. It's continuous learning because our clients are moving up the value chain. What we did 6 months ago even has changed now. We're now auditing, validating machine learning algorithms. And we're doing many different applications. Imagine training people on MedAI, right? We have a surgeon who trains people on MedAI. Yeah. So these things have to move up. And so the crux of it is creating lifelong learners who make learning and new things become very exciting to them. And they're nimble and agile about it. And so these things are super critical for us in terms of once we have the baseline from Anudeep.
Thanks, Radha.
Or any other nonprofit in the skilling world.
Yeah, no, that we have 15 minutes left, and I do want to turn to some of the questions we've been getting in from the audience. There's a bunch, but I'm going to pick, I'll go through them one at a time. And I'll pick the one on skilling first, which is, and unfortunately, I don't know who this is coming from, so these are anonymous, which says that despite, this being a core and essential industry, is scalability the key restricting factor which limits the capital influx in the sector? And I assume that this sector they're talking about is skill training and skilling. Do you believe that scalability is what is restricting capital in this sector? This is just open for the panel. I don't know, Arun, if you want to start with it.
Sorry, if I understood right, you're saying is scalability the limiting factor for investment, you're saying?
Yeah, that's the question.
Okay. So yes, that's true. If you look at all the models, whether we invest in or the ones which we are seeing which make sense also to us, is the scalable ones. So therefore, if in a pilot format or in a small kind of enterprise, it's very easy to demonstrate outcomes. But in a country like India, it is essential that whatever is demonstrated at that level or is in a small enterprise needs to be scaled up. It doesn't make for an institution like NSDC. What we would look at is clearly any model which has got scalability built into it. So for us, even when we look at funding, some of the as the questioner has pointed out, we look at the companies which can train 20,000 people and above over a period of 10 years or a 5 to 10 years time frame. Anything below that is good model to look at, but it is not something which would make sense for the country.
And Arun, do you think that there are not enough scalable models, like in general, which is why investment is not coming in? Not from, like, I know there will be some models that are not scalable, of course, but do you think there's just not enough investment opportunity?
You're right, because scalability means technology. So the use of technology is obviously required for scaling up models. So we are saying that while you can physically put up centers, etc., eventually to get a scalable, standardized model, technology is key to it. So where more and more of our partners, when we look at them, it is those who have invested in technology, whether it's technology in the learning space, that's the training, actual training, or technology in the processes. They are the ones which are able to actually scale up. In fact, these are the ones which would actually survive this pandemic also. When we look at it, the ones which were those who had the small operations, which were looking at. In fact, the pandemic would be once the carnage is over, we'll actually see who survives. And I'm sure those companies which had scalable models, which looked at and also scale drives cost down, because we cannot be thinking of high cost models in this country. So therefore, you are right. There is a dearth of models. But then that also is an opportunity in the sense for anybody who is right now in the space should look at technology as a key area to scale up his own existing model.
Right. Anjali, there's a question for you, which is ag tech boosting the gig economy, and that's sort of the context. But wouldn't too much mechanization actually make jobs redundant? Is the hypothesis being posed? And do you see that as a conundrum where mechanization actually leads to less jobs?
Yeah, thanks, Rahul. Yeah, I mean, that is true, but I think the problem, it's actually a good thing. The problem that we are trying to solve is not just more jobs, as we were talking about earlier, but create jobs which are more productive and are also aspirational. If you were to go to villages and ask farmers, how much they want their kids to become farmers, 9 out of 10 times the answer is they don't. It's a very tough job, and there is, while there may be some romanticism about Indian smallholder farming, but most people don't want to do that. So there are certain, secular trends about the country, which is there has to be greater urbanization. More people have to move out of villages, and people who are left behind in villages have to involve in, and I don't mean left behind as a bad thing, but people who stay back in villages have to practice higher productivity, more technology-based agriculture. And that's the gap that we want to bridge by enabling mechanization and training our workforce to do that.
Yeah, and I think that this is, if I take if I connect this to a little bit like Radha, you are seeing automation on a different level. But I think you would argue that this level of automation, this level of AI has created jobs and job opportunity, which is slightly different from just making people redundant, but creating more opportunity in terms of as technology becomes more prevalent.
I completely believe that because, I think slow down a little bit, April, May, June, but just last month in September, for us as a young company, we created about 150 jobs. And so just in a month. So there is a lot of it's the digital transformation happening. It's just that it's going from one set of skills to a different set of skills.
Exactly.
I think that is the big change. And that's where the huge scaling comes as you look at it from a global economy point of view. So to me, that a lot of the digital transformation that's happening, whether it's in agriculture, whether it's in AI med is now starting to use, med is starting to use with telemedicine, starting to use some of the technologies, the digital technologies, to be able to take that medicine, especially in COVID time, to remote areas, to distant areas, to be able to do remote delivery. So that creates a different need for a different set of skills. So to me, it's a transformation and it's pivoting it. But I actually think that particularly in India, now we happen to be in India, in centers in India, New Orleans and Bhutan. So we're creating jobs in all these places. But to me in India, this can have a pretty big impact. Now it's not the 100 million jobs or 20 million jobs that Anjani is talking about, or Arun's talking about, but it can definitely create 1 million jobs. We actually did, I want to share one thing with you. You asked about the gig economy. we participate not in we do most of our work is enterprise, maybe 95%, but we try out things in the gig economy just to get people to be more skilled in things. So we took our platform, our tech platform, and actually brought in a group of young women who were, I would say, women who had been by society, and basically brought them in, trained them, and had them work on global gig projects. And, they're earning, may not sound a lot to you, but they're earning like $10 to $15 a day. And so it brought a group of women completely out of the misery they were in, and it wasn't just poverty, and took them into a different scale. Now, that was a smallish experiment of about 50 people. My point in that is, again, and it was a lot of it is remote skilling. If you take that on and be able to participate in the global gig economy, and for what I'm talking about is the online economy, not the gig Uber drivers and things, but even training drivers, right? In terms of how they use their the GPS and things like that, and maps and stuff. So that is possible. Yep.
Yeah. We have 5 minutes. I'm going to try to do just one more question, hopefully. This is an interesting question, which is, it is a tough space, skilling, blue collar workers, blue collar jobs, and models are risky. Why do we not see more, risk seeking or risk embracing grant finance in this sector? Is that what the sector needs? And then, maybe maybe start with you guys, so you rather, because you guys are on the operating end of that, but to the funders on this panel as well, do you think that is what's needed? I know, Ratna, you spoke about it a little bit as well. So if you want to add to that, that'd be great.
Absolutely, Rahel. I think, skilling is a need of the hour. We can't take it away. And there are skilling models which are evolving. So as Gayatri was rightly saying that, the things that they are changing in the model will help it scale. Traditional models have come a long way, but, there have been some issues with brick and mortar, and those issues are getting exaggerated now. But there is capital which has appetite in terms of saying that yes, scalability is a challenge. Technology can overcome the scalability, and we can build our grants in a way which are more outcome based. Right. For example, we've been looking at one of the players, which is a beautiful combination of healthcare as well as skilling. Right, so they are trying to fill the massive gap of this skilled manpower which is there in healthcare, and they are doing their trainings through an AI-based tech stack, very beautifully, from sourcing to content development to delivery. They're doing it through cloud. It is a combination of online and offline. So you can choose to come into the classroom. Obviously, in this scenario, it's more online, but when the time allows. And, it is a combination of on the job as well as in the classroom, where the internships are in hospitals, nursing homes, etc., where they're learning a lot more on the job. So there will be appetite, whether it's grant capital or it's investment, purely investment, for models which are able to overcome some of the challenges and show some outcomes, right? Because at the end of the day, while skilling is important, and while it is important to have money backing skilling, at the end of the day, everybody is looking to see how many people got placed, right? So the models which are able to show that in whatever way, through the evolution driven by technology, will see the funding.
Right. Gayatri, do you want to add anything to that from the need for grant funding?
I think there's a spectrum of funding required. I definitely feel grant funding will continue to be required. In most countries, vocational training is grant funded. Education is grant funded. It's public funded. When I mean grant funded, it's public funded. India has got education to be private funded, which is an anomaly, actually. And therefore, we're expecting vocational training to be completely private funded, I think may not be the right thing to do. There has to be a combination of public funded, but possibly, we need better impact bonds. Today, the impact bonds are skewed towards profiteering. I think that has to change because there is a handholding which is required. I want to pick up the issue of scalability also, the question which came. I think, today there are many scalable models. The question is you're comparing against what? I think that's where the issue is. Oftentimes we're comparing because a scalable model has to be dealing with millions, possibly not. In education, even in a model which reaches 100,000 or 200,000 people is has reached scale. Most countries do not have county education systems in that numbers. So I have my own feel is that we're measuring apples and oranges and therefore getting confused. So scalable models exist today in skilling. Scalable models exist in matching. It's a question of what the match is. And Ratna, as she said, we definitely have to change. I mean, in the sense that technology, it's forced everyone to quickly pivot. And just like Radha said, in our case, we've had 2,500 jobs that we've managed to link in this period of time. And I'm talking of peak lockdown period, right? I'm not even talking of the last 1 month. I'm talking of peak lockdown when you could do it. You're not going to be able to do it if you don't have skill. So scalability is there. It's a question of looking at the correct, parameters so that the match happens.
No, that's a good point. We're at time, so this is really good. I'm actually very thankful to all you panelists. I think this was something, I've been in this sector now for a long time and I've learned a lot also. So thank you, everybody. I really appreciate this. I also want to thank the IIC team for bringing us together. If I may just take 30 more seconds to just summarize a couple of things that we heard on the panel today. And I probably will not do justice to the very rich conversation, but Swasti, you set a frame for us, which is supply, demand, and matching. And if I had to think about the investable opportunities for funders who are listening, on the supply side, think about digital models, which have digital layers, and scale is critical, but think about scale in a relevant perspective. And we go to the demand side. There are sectors this is actually very relevant for. What we heard from the panel today, the sectors that are very interesting revolve around gig, telemedicine, sanitization, ag tech, logistics. These are some of the things that are benefiting from the current macro environment. And when we go on the matching side, I think Arun talked a little bit about job portals. Gig is part of matching as well, but even assessments and counseling. I think those are two areas that people don't focus or spend enough time on, which is very, very important. And to round off the conversation on the financing models, I think what I heard very clearly was the need for many, many different forms of capital. We need grant capital. We need very risk-seeking capital. We will need debt. We will need equity. And it's very heartening to see NSDC and Acumen looking at innovative forms of financing, from impact bonds to impact-linked financing, where performance and impact are tied into the incentives for all parties involved. And then I would end a little bit on an optimistic note to sort of say that we need, as a sector, to demonstrate big success, working towards an IPO, showing that these models are no different from any other, and we can achieve that. And that, I think, will be good for the overall ecosystem, both in terms of getting more capital in and getting more entrepreneurs and innovative problem solvers excited about joining this. So thank you again. Hand it off to the IIC team if there's anything
Thank you so much. Thank you so much, Al, for summarizing that so well. And thank you all of you for such an engaging discussion. I think I had summarized it as in one line that while there are challenges, the skilling industry still has opportunity, and there is immense scope to reach and improve the lives of people at the bottom of the pyramid. And of course, we hear you on mechanization and AI and its importance to increase productivity. And of course, the need to look at a spectrum of financing options. Also, I would like to thank all the attendees for taking out time to attend the event. This was our last session today, but we will be back tomorrow with an action-packed agenda. We will start with a keynote by Jennifer Price, President and CEO at Calvert Capital. 2 sector roundtables on education and financial access beyond lending models. We will also launch the IIC KPMG research publication on the state of impact measurement and management in India. The last panel, as Rahul already mentioned, will be on scaling pay for performance, which is a hot topic in the impact investing industry. With that, I would say good night and good day. And thank you so much again.
Thank you.
Thank you all.
Thanks.
Bye-bye.